Welcome back. I'm Pratap here. Today is 22nd March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are kept in a playlist supply demand zone price action course at our NeoStock YouTube channel. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page and scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in the channel. Now let's get into the analysis discussion. Yesterday we have identified 1, 2, 3, 4, 5, 6, 7, 8, 9. We have identified 9 high liquidity zones from a daily time frame and 75 minutes time frame. Out of these 9, we got one trade, successful trade, that is Astral. Astral is a 75 minutes high liquidity zone, high liquidity demand zone. So we have a drop, base, rally candle, and this 75 minutes demand zone again we fine tune. But before we fine tune, you should also observe there is one more LOTL 75 minutes demand zone. We have a rally candle as a leg-in, 2 base candles, and a rally candle. So inside 75 minutes high liquidity zone, we have another 75 minutes LOTL zone. So we need to fine tune these zones. So where we need to fine tune, the next time frame below 75 is 15 minutes. In the 15 minutes, here we have already drawn rally, 2 base candles and a rally. And again this we fine tuned with 5 minutes. We have a rally, 1, 2, 3, 4, 5 base candles and a rally. And already prices previously gave an entry in this zone. But the recently created LOTL zone, we need to fine tune. This is the one recently created. So inside we have fine tuned. See, we have a drop candle, 3 base candles and a rally candle. So this is the 15 minutes time frame. Inside this 15 minutes time frame, again you need to fine tune with 5 minutes. So that's why I'm changing the time frame to 5 minutes. See here. We have a rally candle, 2 base candles, again a rally candle, follow through candles. All these are all follow through candles. So here we have a 5 minutes fine tuned demand zone. This is the place where we need to take our trade. See today what happened? At 13:25, 5 minutes candle, prices entered into the zone. We got the entry. And after that you see the move. So what is the target? The target is immediate 15 minute zone. So this is the one. We have a leg-in ERC candle, 3 base candles and a drop. This could be our target. And above that there is one more target is also there. We have a rally candle, base candle, drop candle. This could be our second target. Why I am saying second target? If we want to get more profits, we need to use a trailing stop loss. But while using trailing stop loss, there are certain limitations. That is what I explained earlier. But anyway, your next training lesson is about trailing stop loss. So in that lesson also, I will take this one of the examples. I will give multiple examples. I will take this also one of the examples. Because this is the perfect example for trailing stop loss. How many of you, I don't know, attended my earlier discussion about trailing stop loss? That you will see in our playlist NeoStock terminology playlist, you will find that video. See, trailing stop loss, you have to use if there is any zone near to this lower time frame zone. This is a 15-minute zone. 15 minutes is our target. Near to the 15 minutes, if there is a lower time frame. What is the lower time frame to the 15 minutes? 5 minutes, or it could be 5 minutes is not convenient. You can even look into 1 minute zones. Today 5 minutes is not very convenient. Let me show you. This is a 5 minutes time frame. By the time price is entered, 5 minutes is not very convenient here. Really, if you want to use a trailing stop loss, and moreover, the leg out candle is not completed. We have a rally, we have base candles, but leg out is not completed. Probably leg out may complete by the time it entered into the target. After that, maybe there could be a rejection and it could be a failed ERC candle. You may not use that as a leg out. That all these possibilities are there. So it is quite risky to depend on the 5 minutes. So what is that you can do? You can go to 1 minute time frame. 1 minute, very near, there is a, first let me delete, after that I will show you about this. Before prices reaches, we have a rally, 2 base candles and a rally. If this demand zone is violated, you can exit. Instead of you book your profit, you want to take a risk. Always you need to bear some risk. What could be your profit? In case if you don't go for trailing stop loss, let me use Infoline. Trading view Infoline to check how much profit you would have got. So let me draw approximate profit. I am calculating. This could have been, this blue color line could have been your profit. Approximately it is 23 rupees 70 paisa is your profit. But what you want to get, you want to aim for even more profit. How much profit you want to aim? The second target. This is your aim. How much it is? It is 36 rupees 65 paisa. This is 23. Another 13 rupees additional profit you will get if your strategy works. If your strategy fails, how much profit you will get? Here in this 1 minute demand zone, if it is violated, you need to exit. So let us draw how much profit you may get. In case if your analysis goes wrong. Analysis goes wrong means your trailing stop loss doesn't work. That is what I meant by. So this could be how much? 18 rupees 60 paisa. What is your actual profit? 23 rupees 70 paisa. So here 18 rupees 60, say approximately 70. 5 rupees profit margin will be reduced if your analysis goes wrong. If your analysis, that means if the trade is in your favor, you will be getting 13 rupees. This is 23 rupees. This is 36, 65 paisa. That means you will be getting another extra 13 rupees. If you lose 5 rupees, you will be losing. I mean, if your analysis goes wrong, 5 rupees profit margin will be reduced from your actual profit is supposed to be 18 rupees 70 paisa. Sorry, 23 rupees 70 paisa is supposed to be your actual margin. If there is a trailing stop loss hit, 5 rupees margin will reduce. Otherwise, you will get 13 rupees profit. So that is the reason why it is a very favorable condition. Because at least you are getting 18 rupees profit is a very good profit. In case if trailing stop loss hit, still you are getting 18 rupees, it's a very good profit. That's why there is nothing wrong in taking a risk here. So here what happened? Prices went, reached the target. After that, from that, again prices pushed down. Let us assume prices came down and went below, and this demand zone is violated, immediately you will exit. That way you will get 18 rupees profit. But prices came down. After that, immediately what happened? Once again they recovered and again started moving. Now this trailing stop loss you are revising, because a new rally candle is created. Now your profit margin is increased to from 18 rupees 60 paisa. Now it will be 21 rupees 10 paisa. Earlier, how much profit you are supposed to get? 23.70. Now, in case from here it came down and this 1 minute demand zone is violated, now you will get 21 rupees. So almost close to 23 rupees 70 paisa. Maybe you may lose from your profit 3 rupees 70 paisa. But still here you are going to get another 13 rupees profit you are about to get. After that, what happened? A rally candle. This is your 1 minute demand zone. Then there is a follow through candle. After that, prices moved somewhere here. And now again what happened? Another base rally is created. See here, new demand zone. Now already you got more profit you will be getting now, even in case if this violates. So you will be getting 30 rupee 35 paisa in case if this without reaching your second target, let us assume prices turn back and hit this stop loss, still you get 30 rupees 35 paisa profit. Earlier you are supposed to get only 23 rupees 70 paisa. Now you got 30 rupees 35 paisa, maybe around another 6.5 rupees more profit you got. But here after that what happened? Finally it reached the second target. Now after that a huge rejection. You would have booked your profit here. Maybe some people may think, maybe further let me use trailing stop loss. If you would have thought, see here, now this has been violated, you would have exited here. That means you would have got 30 rupee 25 paisa. Those who exited in the second target, you would have got 36 rupees 65 paisa. And at what time it reached? At 2 o'clock 25 minutes candle it reached. That is almost the last 1 hour closing hours of your market. And it's not advisable to be too greedy at this level, expecting prices go, because we are almost entering in the last 1 hour. All these long positions will be mostly covered here at this level. That's why it is wise advised to exit here. If those who did not exit, anyway it stopped out, you would have got 30 rupees profit. And here you got 36 rupees profit you got. Approximately I am saying. So I have calculated the profit up to the second target. And how we achieved more target? Because of trailing stop loss. Not only because of trailing stop loss. Trailing stop loss is one reason. The second reason is the technique I told you. What is the technique I told you? Use trailing stop loss. Only previously I explained this point. In my earlier trailing stop loss discussion, I don't know, maybe it is 1 month or 1.5 months back, I explained trailing stop loss. At the time I clearly told you, use trailing stop loss if you find any demand zone, maybe 5 minutes demand zone or 1 minute demand zone, somewhat near to this zone. At least you should get 1/3 of the profit. 1/3 of the profit or more than 60% of the profit. And after that a demand zone, 1 minute demand zone or 5 minutes demand zone is formed, then you need to take a risk, because you will be losing only a small amount of the margin. Maybe if it is 1/3 if you are looking, you might be losing from out of 100, maybe a 30% profit you will be losing. still you will be getting 70%, that is 66.6, approximately I am saying round value, 70% profit probably you will get. If trailing stop loss hit, if it is successful, you will get more profit. Let us assume if this zone, this rally, base rally, if it is there somewhere here, don't implement trailing stop loss. Just book your profit at excuse me. Just book your profit at our immediate 15 minutes target. Anyway, we'll have a detailed discussion in our next training session, so that I can give you more examples in the PowerPoint presentation. But today, what is the profit we got? Astral, we got a profit 13,487 rupees, which is a 10.2% ROI as per one futures margin cost. It is excellent profit. See, ROI 10.2%. This week we got a majority of the stocks, we got a very good ROI. More than our average ROI 6.1%. Only yesterday Nifty 50 we got only 2.3% ROI. There was one stopped out order, my negative ROI minus 0.4. But remaining all are excellent. And moreover, many of these stocks gave double-digit ROI. So this week is a good week. So whoever took trades based on our high liquidity zones, you would have got a very more profits. Let us assume this week, all these trades you have taken, let us assume, you would have got 1,29,179 rupees profit. Even after deducting this loss. Okay, anyway, that is just I am telling you, why I am telling you this, how well our high liquidity zones are working, that is what everybody should observe. And moreover, this is not only based on this week data. We've been observing this is a 242 trade. Today's trade is 242 trade. During last 6 months, if we complete the month March, total 6 months data we will be having with us. Okay, this is about Astral. And next, remaining stocks, let us look into them one by one. Bank Nifty is there. This is a 75 minutes high liquidity zone. Let me show you. We have a 75 minute zone, high liquidity zone. Inside this 75 minutes, we have fine-tuned. This is a ERC candle leg in. We have a, this is a leg candle. These two are base candles, because software considered this as a medium size candle. This is another small size candle. This is a leg in. This is the way software considered. And then we have a leg out. This is a leg out with hidden gap, hidden body. So this is an invisible zone. And this we fine tuned with 15 minutes time frame. So we have a leg candle. This is a leg in and 4 base candles and a rally with a hidden body. After that we fine tuned with 5 minute zone, rally, 2 base candles and a rally. This is the area we are expecting a trade. But prices didn't come. The reason is, we know the reasons. The reason is, this is having a pro gap. There are so many hidden orders. The pro gap is not letting the prices getting into this zone. After consuming the entire order flow in this pro gap, then only prices will be entering into this fine-tuned area. And including pro gap, we can't take a risk. because the risk will be high. Maybe if you want to do, you can do position size, but this is too much to do the position size and take the order. So at this level. After that, the movement is also not very, okay, this is a movement, good profit only, but not very great. So anyway, we didn't get a trade in Bank Nifty. Next one is IRCTC. This is a daily zone. And this is the one we already fine-tuned earlier, IRCTC. We have a rally-based drop. Let me show you in case if you missed the earlier discussion. Inside we identified 2 75-minute zones. We have a drop, 2 base candles, drop, again a drop, 2 base candles and a drop. And within these 75 minutes, again we fine-tuned with 15-minute zones. See, we have a drop-based drop, and here again we have a rally, 3 base candles and a drop, 15 minutes. These 15 minutes again we fine-tuned with 5 minutes. Inside the 15 minutes, we have a rally, 2 base candles drop, and this zone is already tested. Prices went more deep inside, but still, even then, second time again it is tested. And later there were some rejections before entering into this. Probably institutions might be adding more order into this. Or maybe this could be a high liquidity zone. Maybe, we don't know. We need to verify our software with the help of our software. Possibility is there. We are just assuming because multiple tests are happening here. But we can't confirm unless we look into the software. And here again we have a leg candle, base candle and a drop candle and follow through candle. And in this zone we are planning a trade, but prices did not reach. Earlier, see the rejection before the fine-tuned zone. That means a very strong order flow is there. So definitely we can plan a trade, and moreover risk is very small. In case if it fails, risk is very small. And today we didn't get any entry in this. And next one is Pidilite Industries, PI Industries. PI Industries, okay. This is also a daily zone. We have a rally and a base candles and a drop candle. This is the leg in, I guess. These 4 are base candles and a drop. This is how software identified this zone. And this we fine-tuned with 75 minutes time frame. We have a rally, base, drop, not a great leg out, but okay. We are considering to check any order flow is there inside. And here again we have a rally, 1, 2, 3, 4, 5, 6, 7 candles came. 2, 3, 4, 5, 6. Okay, 6 candles. 1, 2, 3, 4, 5, 6. And a drop and then follow through candles. Excuse me. So we have 275-minute zone. Inside we have fine-tuned with 15-minute zones. This is a 15-minute zone, but I didn't fine-tune with 5 minutes, means the structure is not good. So let me show you once we get into this. We have a drop, base, drop. We have a rally, base, drop. And here there is no 15 minutes. But still I have drawn 5-minute zone. Why I will explain. Actually we have to fine-tune inside 15 minutes. But without 15 minutes directly I have drawn the 5 minutes. Why I will explain. So now we have to fine tune. So let us move on to 5 minutes time frame. And check here. See all these candles. So many base candles. All these are all base candles. That's why we don't want to take a trade here. This is quite risky. So I left this zone. Having some doubt by seeing this such a consolidation here, it's a better to leave this. But this one is a good. We have a leg candle, base candles and a drop candle. This is the 5 minutes zone we have drawn. If you feel the risk is high, what you can do? You can take type 3 entry like this, minimize the risk. Suppose if it turns, before entering if it turns, you will miss the trade, nothing will happen. But if it comes, enters and turns, you will get a trade. Because sometimes the risk is high, this is how you can plan your trade. Or you can do position size. But position size is possible in the cash segment. And position size in F&O is difficult unless you invest a huge capital in the F&O. Instead of taking 5 lots, you may take only 1 lot. That way you can do. But anyway, here we have a drop, 2 base candles and drop. Let me draw wick to wick. We have a drop, 2 base candles and a drop. The reason is, see the rejections before entering. That means there is a strong order flow in this area. This is an indication. And the second time, see here, prices went very close and then came down. This is another price action clue indicating there is a strong order flow in this. That means this is a price action clue, rejections. And how we can plan trade? As an aggressive trade. What is aggressive trade? If it is not a fine-tuned zone, but still you want to take a trade without fine-tuning. The reason is one level you removed. See, we have a daily zone. Inside daily we have 75 minutes. Inside 75 minutes, without 15 you went to 5 minutes. You fine-tuned by bypassing one time frame. Then you can call it as an aggressive trade. Aggressive is a quite risky trade, but you are trying to minimize the risk with the help of price action clues. That's why aggressive trade should be taken only if you have price action clues. Otherwise, we should not plan such kind of trades. These kind of zones will be violated easily. And when you have to plan, if all these zones are violated and finally they reach, at the time you can plan aggressive trade. But risk should be within our limit. Otherwise, there is no meaning in going for aggressive trade. And next one is Reliance. Reliance is a daily high liquidity zone. Yes, it is a daily high liquidity zone. We have a drop, base drop. Actually, it is a counter trade setup related trade. This daily zone we fine-tuned with 75 minutes time frame. This is the one. Maybe up to here. Yeah. We have a rally, 4 base candles, or even you can consider this is part of base. And now drop, 5 base candles and a drop. And inside this again we fine-tuned with 15 minutes time frame. Here we have rally, 3 base candles and a drop. It's not a great leg out, but okay, we can consider because there is some move down. And after that prices came and rejections because of the order flow here. and again reach it to the 15 minutes level, but we plan our trade in the 5 minutes level. So inside this 15 we fine tune to 5 minutes. Here we have a rally based drop and a follow through candle. Excellent. You can plan a trade in this zone, a short trade. But anyway, today prices did not enter into this zone. And next one is Tata Communication. This is also a daily zone, daily supply zone. Here also we have a drop based drop, and this drop based drop we fine tuned with 75 minutes. Here we have a rally based drop. This is the 75 minute zone. Inside 75 minutes we fine tuned with 15 minutes. This is the 15 minute zone. We have a leg candle, ERC candle, leg candle, 1, 2, 3, 4 base candles and a drop candle. And finally this 15 minutes we fine tuned with 5 minutes. There I identified two 5 minutes zones. This is a drop based drop. You may ask a question. This is also looking like base candle, but you need to add the hidden body. The moment you add the hidden body, this is a leg candle only. So that's why drop based drop and rally based drop. This is another 5 minutes. So one of these zones you can plan your trade. Here you can plan in case if it fails, if it violates, immediately you have to plan your second trade in this particular zone. The first zone stop loss is very, very small. In case if it fails, by the time it will consume a lot of demand, and now supply will become very strong, push the prices down. But anyway, today prices did not enter into this zone. We didn't get a trade. Next one, Astral, we already discussed. That was a successful trade. Next, India Mart. See this zone, 75 minute zone. We have a rally based drop. And if you go to 15 minutes, the structure is not good. See here. But the only possibility you have, something like this. So this is a 15 minute zone. Inside 75 minutes, 15 minutes, but this is overlapped. Some part came out. So if you want to strictly place your orders only inside high liquidity, what you can do, you can make it to type 3 entry like this. This is the way you can plan your trade. If there is a fine-tuned area inside this, if there is a fine-tuned area inside this, and one advantage, now risk is also minimized. Now go to 5 minutes. This is a kind of fine-tuning at experience level. If you are in the beginning level, beginning means if your experience is less than 5 years, you are an experienced trader, but less than 5 years. Still, I can consider you as an intermediate level trader. If your experience is beyond 5 years, maybe beyond 7 years, at the time you can take such kind of risky trades. But you need to have some learning, right? So that's why I'm explaining. How we are adjusting, the kind of adjustment. Sometimes this is risky. Sometimes easily violated also. It will also happen when you plan such kind of trades near these zones. But sometimes you will get good success also if you plan like this. Today it is a successful trade actually. But I didn't consider, because I don't want you people to get into these levels at this stage and try. And finally if you get losses, ultimately again that will become a negative impact on you. That's why I want you people to take only safe trades at this point of time. But future learning point of view, I'm telling you. At the same time, I'm telling you, this kind of analysis is a quite risky analysis. Please don't forget it. Now, is there any fine-tuned within this area, 5 minutes level? See here, you have again a rally candle, 2 base candles and a drop candle. So how do you draw your zone like this? But where you want to plan your trade? Inside, as a type 3 level. Further, if you want to reduce, maybe here. That way also you can plan. This is the type 3 entry. Purely type 3. Why we are selecting type 3? Because this type 3 proximal entry area is exactly inside high liquidity 75-minute zone. So that means you are taking trade inside the high liquidity, not outside the high liquidity. That is one reason. Second reason, risk is minimized. Even if you get lost, something wrong happens, the risk is very minimal. Why I am not suggesting you people to take trades, not to take trades. Why I am suggesting not to take trades in this area is currently you are at learning level. Maybe you are started trading just now. Or maybe already you are trading, maybe last 3-4 years you are learning still. That means you are still in the process of strengthening your skills related to supply demand zone. You need more than 5 years experience, then only you will be having strong understanding of supply demand zone price action skills. So in case if it is stopped out, what happens? Immediately that will impact your psychology levels. If you take safe trades, more success you will see, so that you will be having a lot of confidence. See today what happened? Price sent today morning 9:15 candle, and from there it is started moving down. Does it reach a 15 minutes target? Yes. You have a drop base rally. Your 15 minutes target, demand zone target is reached. You would have got actually a very good profit. What is the value here? Approximately I am calculating. 2695. High of this zone is 2694.90. Let us say 2694. 2694 minus, and what is this target? The open of this candle 2653. You would have got 41 rupees profit. India Mart. How much profit you would have got? So 300 is the lot size. So 41 into 300. You would have got 12,300 profit. What is the ROI? 12,300 into 100 divided by 1,68,422 is your profit. 7.3% is your ROI. You got 7.3%. This is more than our average ROI. But still I am not considering this trade is for our point of view. Our high liquidity zone point of view, it did its job. But these are all quite risky. This is a risky analysis. Just learn, but don't implement until you get a good experience. So it's a successful trade. India Mart. Like that, one more trade is also there, but that also I did not consider. That is also a risky analysis like this. I don't want you people to do risky analysis at this point of time. One trade is good enough for you. See today, Astral, one trade, that is good enough. Gave extraordinary profit. See Jubilant, this is a 75 minutes high liquidity zone. We have a leg candle, base candle and a drop candle. Because we have to draw high of this base or leg out. So we got this zone. But if you look into 15 minutes time frame, if you want to fine tune, see the structures and all, risk is increasing. So if you draw the 15-minute zone, it increases the risk. Let me draw. The zone will be like this. The 15-minute zone. And further, if you want to fine tune in 5 minutes, the 5 minutes risk is also same, almost 15 minutes and 5 minutes are same. That's why we don't feel like to take a trade. But if you use the risky analysis, see recently when prices are entered into this zone, this is the area. What is this? We have a leg candle, base and drop. That means the 5-minute zone you can draw like this. And today prices reached this area. But as I told you earlier, it's not advisable to take the trade outside. What you can do? You adjust the risk. Instead of type 1, you take type 2 entry. Still you may ask a question. But this zone, part of the zone is inside the 15 minutes, fine-tuned 15 minutes and remaining part outside the 15 minutes. If that is the case, further you reduce the risk. Draw your zone exactly at the proximal line of the 15-minute zone. If prices enter into this area, let me change the color to dark color, you will get clarity. See, now if prices enter into this area, then only you take trade, otherwise don't take. And moreover, your risk is also reduced now. But see today what happened. This is today at 9:15 candle. This is 9:20 candle. It gave an entry. After that prices came down. Where is the target? The 15 minutes is your target. Has it reached the 15 minutes target? See here. You have a rally, base, drop. It reached the 15 minutes target. Excuse me. You got the entry here and it reached the target. So what is your entry? 452.70. 452 rupees 70 paisa. It went up to 452.80 paisa, but 452.70 is your entry. Minus, what is your target here? 448.20. That means you got 4 rupee 50 paisa profit we got. How much profit we would have got? Jubilant Foods. This is 1250 lot size. So 4.5 into 1250. You got 5,625 rupees profit you got. What is the ROI? Divided by 1,03,362 approximately. You would have got 5.4% ROI. A little less than our average 6.1, but 5.4 is excellent. This could have been your another successful trade. How we are doing these trades? Just doing adjustments within your high liquidity area, but you are taking the zones that are overlapped with high liquidity zones. Actually, all these are all overlapped with high liquidity zones. And why? How you got the recent trade? The recent trade you got because we fine-tuned at the most recent price action, because here you have a rally, base and drop candles, and there is a candle went up inside, so inside you fine-tune. But all these are all quite risky trades, because the analysis itself is a quite risky analysis. I don't want you people get into this level at this point of time. But remember, at some point in the future, you should get into this much deep. Suppose if it is stopped out, I might have lost a very small amount of the loss, but it is a successful. See, second time what happened? Ultimately, this one is stopped out. Maybe if you would have taken our second trade on the same zone, it would have been stopped out. That's why they are all quite risky trades. But luckily, two trades are successful today. One is Jubilant Food and previous one is India Mart. But anyway, I am not considering for our calculations point of view. I am just telling you because you people should get some exposure on this area and get experience. This is a macro level analysis, observing minute level points. And those minute level points are you are trying to turn into your favor. Turn them into your favor. And the last one is PEL, Piramal Enterprises. So this is a 75 minutes high liquidity zone. We have a drop, two base candles and a drop, and we fine-tuned with 15 minutes time frame. Here you have a drop based drop. This is also you can consider, but why I didn't run, maybe the 5-minute structure is not good. Maybe that could be the reason why I left this. But anyway, I'll show you why I removed this. This is a drop based drop, and this you fine tune with 5 minutes. What happened? I'm sorry for my mistake. I was analyzing the wrong one, the earlier one, the old previously generated. This is the one we need to refer. That's what I'm wondering, something happened. So this is the latest one, not the above. This is near to the recent prices. This is the 75-minute zone. First let me go to 75 because I was analyzing the wrong one. So this is like a ERC candle, base candles and a drop candle. This is the 75-minute zone. And this I fine-tuned with 15 minutes time frame. We have a rally, base candles and a drop. Leg out is not great, but okay. The reason why I have drawn is Want to check maybe there could be some strong order flow. That was my intention. Even though the leg out is not great, I considered. Sometimes I told you we compromise and draw to identify order flows at the lower time frames. But the moment I get into the 5 minutes, I didn't fine tune this in 5 minutes. I'm not comfortable with this price structure here. See, rally candle, drop candle. This is not at all. Lot of consolidation. See all these candles. So that is the reason why I'm not feeling comfort at all. Maybe you would have considered this rally base drop. This one is already tested and pierced also. See here. This is the one. Already pierced. So after that, not much comfort with this zone. That's why I left it. Maybe this zone will be violated. That is my expectation. Today prices went there. See, majority of the time price is inside. Didn't go up to here. Maybe there could be some strong order flow above. Maybe tomorrow, I don't know. It will again turn, come down, or it will be violated. But according to me, this is not a convenient zone for me to take a trade. So this is about the high liquidity zones we identified in our previous report. Hope this analysis will be useful to you and helpful to you, because we discussed some deep analysis related some kind of deep analysis we did, especially Jubilant Food and India Cement. But it worked. It turned into successful trades. Even though I am not considering at this point of time, but because in future you will get experience, I talked about that. Please remember. But don't get into that kind of level of analysis at this point of time. First, you always focus on the safe trades. So this is about today's session. Let us all meet again in our next video. Thank you.